Our next speaker is Anna McMillan. Anna McMillan works at the intersection of venture development, financial innovation, and emerging technologies. Her focus is simple, enabling MSMEs to access capital with scale and resilience. Please welcome Anna.
So, good evening, everyone. I don't know where are you guys tuning on from. I'm tuning in from Dubai. So I'm very happy to see all of you today. Let's start this conversation. First, with welcoming you and thanking you for the opportunity and for the time. And there is something that I want all of you to remember from the beginning and at the end of this presentation, which is $5.2 trillion. Okay, $5.2 trillion. Let's go to the next slide, please. So the $5.2 trillion, that's the financing gap we have when we talk about the formal MSME in emerging and developing economies right now. Today, according to the International Finance Corporation, right? These are the numbers we are talking about. And then let's say when you add, again, all of those micro enterprises that did not make it to the stats, that number, of course, climbs up to what we estimate right now to be around $8 trillion, right? A number that I would say is much more relevant. Why? It talks about around a 40% of market that today is not being measured, but it doesn't mean that it don't exist, right? So the conversation we have here today, right, is what is happening with this. Let's say we put that in context. We are saying that we are past $8 trillion, right? So to give context to that, what we are here, we are not talking about just a rounding error, right? As I was saying, we are talking about a difference of 40% of things that we are not able to measure correctly. And the biggest issue when we are not able to measure things correctly is that we are talking about a structural damage, a structural wound that is created in the global economy because of this, right? And I would say, without wanting to be dramatic, but we could say that is, a wound that bleeds, that is bleeding daily, right, and silently. Because what happens with these SMEs that are not being made part of the stats is that they don't have access. They don't have credit access. So we were saying that one of the biggest problems we have right now is the fact that because of this very important gap in the numbers, what we see is a lot of companies, a lot of SMEs, and a lot of MSMEs that don't have access to credit. One of the favorite things for banks to say is that we have insufficient collateral, for example, from this particular person or this particular company. So the credit system also comes up with things like, okay, there's not enough credit history and a lot of other things that cost capital, right? And the market capital to say you do not meet the minimum requirements to access the opportunity of credit, right? And the paradox that brings us to this conversation today, which is extremely important for me, the very enterprises that are responsible for employing most of the people, around 70% worldwide, 70% of the workforce worldwide, right, are employed by SMEs and MSMEs, right? So the very business that accounts for almost 90% of all firms in the planet are the ones that sadly at this point are getting excluded of the credit system. And this is what we should understand just when we want to talk about this matter, right? For me, one of the key points when we are discussing this is We don't have a problem where the market is insufficient, or we don't have a market failure. What we have, for me, is a question in front of us, where the real question is, and what I want to build for you during this session is whether within the current situations, something like artificial intelligence, or how do we cover the next generation of finance in a way that we are able to reduce the current gap. Because what we have right now is not a situation where these companies don't exist. What we have is a situation where these companies are not able to access the right amount of capital and scale because they don't comply with the basic requirements of the current financial system. So we were talking about right now what we have, right? A lot of people are talking about AI. AI is going to take our jobs. AI is the enemy in so many ways, the way it's being portrayed. But the question is AI the enemy? Or is actually that we don't understand yet, especially as SMEs, how to make the most and take advantage of the current tools, right, that are made available to us to bridge the gap, right? Currently, when we look at the multiple ways of applying artificial intelligence, we should not be scared. What we should be concerned about is whether we are reskilling fast enough, right? When we look about one of the reasons why I think traditional finance has failed the MSMEs is because the solution must have been architected around a real problem, right? And currently, what we have is a simplified version of that, right? The traditional credit as we know it, right? Was an underwriting that was built for a world on paper. And that is the most important thing that we need to understand, right? All SMEs, all MSMEs right now are working in a reality where the world was built on a credit on paper, balance sheets, minimum requirements of 3 years of being audited, real estate collaterals, and you name it. A lot of I would dare to call it unrealistic requirements, especially for those who are yet scale at the right level to reunite all the requirements that the current financial system demands from all of these companies, right? So, without going so much into the problem and trying to understand a little bit how do we deal with this? I would say we are currently living in a world, and this is very important, that is excluding, right, by design, all street vendors. And when you look at the volumes that they are processing per day, right, we are looking at a system that is actually having a very important leakage. However, the very informal person doing business gets less punishment by the system than the person trying to start in all its shape and form operating, let's say, within the frame of the law. So this is something that we need to change, because currently the result is that as of 2025, around 75% of SMEs across emerging markets lacked all adequate kind of financing to operate. And of course, if you can't operate, you can't grow, right? And we explained, if SMEs can't grow, if MSMEs can't grow, what we see is a heavy impact on unemployment, right? So it's like a very interesting what comes first, right? So we were talking about, again, 70%, yes, 70% last year did not have access to operate within the financial system. These are numbers that should scare us, right? If we can, no, we are good. We are good. Sorry, one second. So one thing that is extremely important for us to understand when we talk about AI is what is the inflection of AI here, right? And why do I bring AI to this point, and how do we make it work for us, right? This is not just making storytelling. This is landing concepts in a way that MSMEs can understand how to make the most of the moment we are going through. So currently, according to alternative data, right, the transaction flows, payment history, e-commerce sales speed, supply chain participation, utility payments, and I would say even psychometric indicators, right, are being converted. All of these variables are converted through machine learning. One of the things that for the longest has happened with financial institutions is that they have accumulated enormous amount of data, and this data was not put in context. Today, what's happening with the traditional banking system is that more than ever, this data has reached the point of being used in real time, right? And being used sometimes against us. And when I'm saying in used against us, what I'm saying is we are not making the most of it because we don't know yet. Please don't change the slides until I ask you. Thank you. Okay. I was saying, okay, sorry, I lost that. So, well, we were talking about numbers that are really striking. And I think the global alternatives we currently have, right, are markets or are looking at markets that were valued at $12 billion last year, right, and are projected to reach, okay, 37 trillion by 2035. Okay, so this is the MSME market, right? And the MSME market and businesses leading right now are the fastest growing application within that market, right? And that is expanding at a compound annual growth rate of around 25%, right? Roughly by 2031, right? So the numbers are incremental and are really, really large for us to take into consideration. So I would say over around 64% of all fintech companies right now, okay, are already investing in AI and AI scoring systems. This is very important for us to understand because if we don't understand that the financial system is investing in scoring intelligent systems, we cannot get on board and make the most of the opportunity. So in I would say in practical terms, what does it mean? Currently, this means that basically the lender can now access small manufacturer, let's say in Vietnam, asking, okay, do you own property? Okay, but by asking how consistently does your customer pay you, or how quickly do you restock, or how does your cash flow, for example, operate for you to at this stated revenue, right? The machine doesn't care at this point. When smart scoring gets into play, the machine doesn't care about what is your collateral. The machine cares about the behavior of your company, right? And if the behavior turns out to be, let's say, far better than the predictor, right? Let's say that your repayment predictor is higher, that's how you are going to score higher. So what I want to push is that past the technology narrative that we are going through right now, what we need to understand is that there is a risk in this space, and we have to clearly name this risk. AI is not a neutral tool, and AI is a risk if we don't understand what we are doing with AI, right? Every algorithm that we use at SMEs or MSMEs, right, is an algorithm that encodes the assumption, right, of those who build it. Let's say if we train a model in historical lending data, right, what happens is that that will already, right, reflect decades of exclusion. What do I mean by that? If we feed all the current data, okay, of a bank to an AI and I train just based on that, SMEs and MSMEs will continue to be excluded from the conversation. Why? Because it's trained on all data and old patterns on how we used to make credit available. We can move to the next slide, please. So one of the things that we believe is that the next frontier is not just AI, and we should not look just at AI. We should look at um, AI in the context, or we should look at the context, sorry, of on-chain capital when we talk about MSME liquidity, right? Right now, for example, we have numbers that are very important and concepts that we have heard the media talk a lot about, but we don't really understand. Especially, I think SMEs and MSMEs are not keeping up with what the big players in the market are doing. When I talk about concepts like tokenization, for example, with SMEs or MSMEs, I realize that all of these concepts that make the future of finance, and when I'm talking about the future of finance, I'm not talking about the next, 5 years. I'm talking about the next 6 months. For example, when we talk about on-chain capital, we talk about something as powerful as tokenized assets, right? Why is this important? Because tokenized assets just last year have reached $24 billion market, right? And we have seen that this year, in comparison, it has grown 266% so far, right? So let's say now I want you to let's say take one level further, right? To a frontier, again, like I said, this is more a theory because these are the numbers from 2025 and these were the numbers in 2026 so far. But let's say the tokenization of real world assets right now is beginning to reshape how capital markets can look like for MSMEs, right? And I understand how this seems to be a concept that is very far fetched. However, this is a concept that, if we understand and embrace, facilitates access to capital. And not only facilitates access to capital, but facilitates access to building the right credit history. So let's say here is currently where we stand. In tokenized real world assets, we are okay. I'm very happy to later on answer questions on a private chat or whatever it is, if anyone has questions on tokenization. So let's try to go a bit faster as requested. So let's talk a little bit about what are the three execution frameworks that we can look at. Again, to bring me to, I would say to bring us to this point, we need to understand two things. AI is not the enemy, and tokenization is a tool that we need to get familiar with and can become our best friend. So, and like I said, I don't want you to be inspired after this presentation, or I don't want you to, think that this is going to be an easy thing. I just want you to get at least motivated to go and do your research, start putting your company in the right track to become competitive to what the demands of the future of finance look like. So the three specific execution priority that leaders should have right now in capital providers should have right now are within this framework. If you are an MSME seeking capital, I would say stop leading with your balance sheet. That is not something that would move forward. I understand that in the next 6 months, this would still be the way to do it. But what we need to understand now is that we need to start documenting our data. We need to start documenting our transaction data, payment histories, our receivables, the velocity of our data, the velocity of our system. We need to start getting comfortable with building a digital footprint that we can go and present to our banks, because this says a lot more than just a balance sheet, right? And this is what we are sitting on, billions in data, and we don't understand how to use it yet. I want to try and go as detailed as possible. We don't have enough time. But what I would say is we have framework one. Okay, in the framework one, we need to adopt a cash flow first credit thinking, right? Um, like I said, let's document every transaction. Let's connect all the accounting, payments, banking, all via API. This is very simple. There are a lot of offerings ongoing where you can do this safely. And most importantly, digital footprint. For example, a piece of data that I found a little bit scary when I was doing the research for this presentation was that, for example, in India, around 49% of all SMEs don't have a website right now. And that's a little bit of scary in the times we live, because what is your digital footprint if you don't even have a website, right? And of course, that's a different conversation, but that is a conversation that I think for the last 30 years of the internet, we have probably been postponing if we today don't have a website. The framework, too, that I want us to keep in mind is we need to have the tokenized treasure thinking. Tokenized treasure thinking sounds like a very complex thing, okay? And I understand that. But I want to tell you that I'm not here preaching something that I'm not doing. For one of our companies, we have not only tokenized our treasury, we have tokenized our equity. So the way to invest in our company is through the tokenized equity, right? And this gives access to capital in a very transparent and accountable manner. So this transforms into liquidity, right? This is on chain, it's monitored, and officially, right? You don't have anything that a financial institution would not rely on. And the third framework that I think we need to be focused on is that we need to focus on governance, right? I am not a person to cheer for every innovation, especially if it doesn't come with governance. When we are introducing any kind of innovation in our company, any kind of technology, we need to have an internal governance, right? We need to know how to regulate the outcomes. We need to know how the mechanisms are, how are we discriminating the data. And we can move to the next slide. I would say when we look at this different options and frameworks, what we need to understand is the most important thing here that a lot of us tend to look at is, okay, this is a policy situation, this is a system situation, this is something that has to be fixed by the banks and the cooperative has to fix it for us. No, right now we are talking, and again, I want to finish with exactly what I started. $5.2 trillion with an app that doesn't allow us to account for 8 billion, $8 trillion. So we are talking about $3 trillion that get unaccounted for. So this number again represents not just the amount that we can grow. This represents the amount that we could actually expand onto if we, as SMEs and MSMEs, learned how to make the most of technology and how to use this to optimize and align with what the markets are demanding on us. Okay, so that's it. Thank you very much for the extra time.